We take the tea break. Let's look at independent contractors, personal service providers, and labour brokers. Now, this becomes a really important issue, mainly for employees' tax purposes, but it also cuts into the calculation of taxable income because it does impact on what tax deductions you're able to claim. But at the first point of call, if you have somebody who fits into, let's say, personal service provider, the very first impact for them is that payments from client to the personal service provider have to be subject to the withholding of employees' tax. And then later on, there's the issue around when they fill out their tax return as a personal service provider, what tax deductions are you able to claim? And yes, of course, we would also then look at the various tax rates that would apply. All right, now I'm going to look at each of these and then we'll examine each category and see what it is exactly and what the tax implication will be around that. Okay, so independent contractors. Now, this, a few years ago, I think things are pretty much, the dust has largely settled on this issue now. But of course, that's easy to say. When people start up business, it can be another story because how do they determine if they're an independent contractor or not? Well, nowhere in the Income Tax Act will you find a definition of independent contractor. It doesn't exist. What does exist is that we've got a definition of remuneration in paragraph 1 of the 4th schedule. Now, the 4th schedule is the schedule that deals with employees' tax. And the 4th schedule tells us that if you've got remuneration, as defined, paid from employer to employee, then employees' tax must be withheld. So you've got those three aspects. You've got to have remuneration paid from employer to employee, and if all of those three things exist, then employees' tax has to be withheld. So if you've got a payment that's going from A to B, the question is that payment remuneration as defined? That is key. Because if it is remuneration as defined, then by default, pretty much the person paying becomes the employer, the person receiving becomes the employee. So it becomes almost a self-fulfilling prophecy. So the key thing is this remuneration? And so we've got to look at that definition of remuneration, and that includes a whole host of different things, you know, the obvious things like salaries and wages and fringe benefits and all those kinds of things. And then it specifically excludes any amount paid or payable to a person who is carrying on a trade independently of the person paying the amount. So that's where you get this concept of independent contractor coming in. It flows from this part of the remuneration definition. So any amount paid to a person who is carrying on a trade independently of the person paying the amount is not remuneration. Now, if we could stop there, that would be a nice, easy concept, but very difficult to apply. Because how do you determine that a person is, in fact, carrying on a trade independently of the person who's making the payment? Well, this is a huge, huge topic. But to make it a little bit simpler, within this definition of remuneration, we've got a situation where a person is deemed not to carry on a trade independently, and then a situation where a person is deemed to carry on a trade independently. Apart from that, there's also a whole lot of case law and interpretation and stuff that lies behind that to identify whether a person is carrying on a trade independently. So that's important. We can't forget about that. Because at the outset, we're saying, is this person potentially carrying on a trade independently? Do they make out their own decisions? Do they work on their own without supervision? All sorts of things come into it. But a person is not deemed to be carrying on a trade independently. I'm sure it's supposed to be say deemed not to be, but I'll just put it in here the way the legislation reads. A person is not deemed to be carrying on a trade independently if both of these things must be fulfilled. The services are required to be performed mainly at the client's premises, and the person who renders the services is subject to control or supervision. In what respect? As to the manner in which the duties are performed or the hours of work. So, I know this starts getting a bit technical, but what we're saying here is that if the person is required to perform their services at the client's premises, and they are subject to control or supervision, let's say around their hours of work. So if they get a contract, they just start out business, very exciting, they're going to do IT development, whatever. They find a client. The client signs a contract with them and says, okay, I know that you've got your own business going on. I want you to come into my offices and carry on a certain project for me. And so you must actually come to the offices, and I want you to be there during our normal working hours from 8 until 5. Now, the person, yes, potentially they think they're carrying on their own business, but they're having to provide the services at the client's premises, and they are subject to control or supervision as to their hours of work. So that means even if you think you're carrying on your own business, you're registered as a VAT vendor, you're issuing invoices, everything looks like you are independent, but this makes you not independent for this purpose. You might still be a VAT vendor, all right? The fact that you're a VAT vendor doesn't mean that you can't be an employee. It's possible that you could. So if you think you're carrying on your own business, but you're then deemed not to be carrying on business for the purposes of this remuneration definition, then that means that the fee that you're being paid by your client is remuneration as defined, and then it must be subject to the withholding of employees' tax. Okay. It doesn't mean that you're not carrying on your own trade. In reality, you are carrying on a trade. But for employees' tax purposes, you're deemed not to be carrying on a trade, which means you are subject to the withholding of employees' tax. Now, that means that on the RP5, the correct disclosure would be under the code that says payment to an independent contractor, all right? But it's subject to withholding of employees' tax, all right? Now, a person is deemed to be carrying on trade independently, so this is a good feature, if throughout the year of the tax year they employ 3 or more employees other than connected persons on a full-time basis engaged in the business of rendering the service. So again, we've got the 3 or more full-time employees. So let me go back to my IT developer. The IT developer is required to provide services at the client's premises, etc. But he's got 3 or more full-time employees engaged in the business of rendering that service. That makes him independent. So if you've got enough employees, then this doesn't apply to you. You're still regarded as being independent, which makes sense because you've got a business presence here with 3 or more employees. The real risk comes in with people who are operating on their own. All right, they're sole traders, consultants. That's really where the danger comes in. So independent contractors, we're talking about sole traders. We're not talking about companies. We'll get to companies just now. And we're talking about people who are carrying on their own business. Factually and according to the law, apart from this deeming provision, they are carrying on their own independent trade, what looks independent, but this question of supervision is always a difficult one, and so they've clarified this by saying if this is the context of the supervision, then you're deemed not to be carrying on an independent trade. Okay. All right, so I know it's a difficult one. It's never an easy one to actually apply in practice, but it's important to know the rules. So as I say, if you're an independent contractor, payments are subject to employees' tax. Payments to a person deemed not to carry on independently is remuneration and is subject to employees' tax. Now, SAR's interpretation note, if you are dealing with independent contractors or anybody who's consulting with you and they're telling you they're going to start up their own business, etc., make sure that you have a look at interpretation note number 17. Very, very important. They got a lot of useful information in there. Okay. Okay, so maybe what we should do is keep the personal service provider separate by doing that after the tea break. So, because it is just on 10:30 now. So let's take a 20-minute tea break and then we will carry on afterwards. Thanks. Okay, are we online, ready to go? Good. All right, so still talking about the question of independent contractors, personal service providers, and labour brokers. Oh, sorry, before I get started, was there not going to be a lucky draw? Or do you want to do it at the end? Can we perhaps do it at the end? All right, because I'm on a roll now, so we can rather keep it for the end. That's great. Okay. All right. So on this question of independent contractors, personal service providers, labour brokers, the independent contractors, we said, are individuals who carry on an independent trade, and in certain circumstances, the amounts paid to them would be free of employees' tax on the other hand, some amounts might be deemed to be remuneration effectively subject to employees' tax. So that's individuals. But the equivalent of that in a company context is your company or trust. So a personal service provider, this is defined in the 4th schedule, and the definition says any company or trust. So it doesn't include individuals. And it says the service to the clients is rendered personally by a person who is a connected person. This is very similar to what we saw in the small business corporations where we spoke about personal services. And we said we had that table of different kinds of services, and we said but the service is actually physically rendered by somebody in that context we said who has an interest in the company. Here it's a little bit closer than that. It's somebody who is a connected person in relation to the company or trust. So again, we've got an entity as opposed to an individual. So that entity itself doesn't have arms, legs and a brain, etc. So you've got to have an individual who actually provides the services. Is that individual a connected person in relation to the company or trust? If they are, so you've got typically a CC, one member, and the member does all the work. All right, so owner managed, he does everything. Okay, then potentially we've got a personal service provider. So you've got the entity of a CC, it's a connected person who's physically rendering the services. If that person would be regarded as an employee of the client had he rendered those services directly to the client. Now, what would make him an employee? Well, you've got to take a step back and say, all right, let's just take this entity out of the picture. Yes, he is providing his services through a CC, but let's pretend that CC didn't exist. If he was just providing that service directly to the client, would he be regarded as an employee? Now that's a very loaded question because it links back to what we said just now around independent contractor, and it links back to the whole question of what makes you an employee. And that comes back to control and supervision, who's taking the risk, all those kinds of things. It's a huge technical question around what would make you an employee. But put it this way, if that person has got an office at the client's premises, he's got a desk, nobody else got his family pictures hanging all over the wall, and he goes in, he goes to all the office parties, and you know, you get the picture. But he's operating through a CC, in all likelihood, if he wasn't operating through the CC, we would call him an employee, right? So now we're saying, in that context, he would be regarded as an employee if he rendered the service directly to the client. All right? Or alternatively, so this is an alternative, where the duties must be performed mainly at the client's premises, that person or the company or trust is subject to control or supervision. So again, we go to this question of control or supervision linked to services performed mainly at the client's premises. All right. So even if you said this person who's the member of the CC, even if you said, okay, even if he worked on his own, we wouldn't regard him as an employee. But is he required to, or does he actually perform the services mainly at the client's premises? And is either he or the CC subject to control or supervision as to how he does his work, or the manner in which the duties are performed in rendering the service? So again, we come to this control or supervision question. All right. So those are two alternatives. And then there's another one, or the company or trust derives more than 80% of its income during a year of assessment from services rendered to any one client. Now, this 80% rule catches a lot of people unawares. And if you look at it, it just stands there on its own. It's not, no ifs or buts. It simply says, if your services is rendered by a person who's a connected person to your company or trust, and the company derives more than 80% of its income from services rendered to any one client, boom, that puts you into the context of a personal service provider. Yes, we'll come to the except now. But the except is probably not going to help you if you're a newly formed closed corporation. And this is typically what happens. People start out, they get all enthusiastic, they rush off, get a CC set up, open a bank account, get everything going, but they've only got one client. And what they don't realize is that they are getting more than 80% of their income from one client. That's causing that company to be a personal service provider. What does that mean? It means when your client pays that company, the client has to withhold employees tax, because a personal service provider is defined to be an employee. All right. So you've got the employee's tax that has to be withheld unless, let's just look at these exclusions. Unless the company employs throughout the year of assessment 3 or more full-time employees, excluding connected persons, engaged on a full-time basis in the business of rendering the service. So, and I'll come to you in a sec. But so what we're saying here is you've got a new CC. We've just got the member, all bright-eyed, bushy-tailed, very enthusiastic about this new business. No employees. That's typically the scenario when you start out. So you can't make use of the 3 or more employees story here. But you get more than 80% of your business from one client, you're into the realm of personal service provider. And the employee's tax is the least of your worries. Because yes, you might say, well, I have to pay this tax eventually anyway. But what's really going to hurt is when you look at what tax deductions you can claim, which we'll come to now, and you realize that you are very limited in terms of your deductions. Yeah.
This went throughout. If you look at it in terms of if I only have 3 or more employees halfway through the year,
not going to help you. Okay, so 3 or more employees, because it says throughout the year of assessment. So the question here is, if you start, let's say you've got a year of assessment running from 1st of March to the end of February, you haven't got money to take employees on. So after about 8 months, you can now finally employ somebody, 3 people, all right? But now you haven't employed those people throughout the year of assessment. Okay, so unfortunately it's not going to help you in year 1. Year 2, yes, it will help you.
so SARS is not consistent with if you turn 60 by the
End of the year, yes.
Okay.
Yes.
But anywhere throughout the year, if you turn 60 or something.
Yeah. So this is not like your over 65 rebate that says if you reach the goal by the end of the year, you're home and dry. No. Okay. So this is saying you've got to have met these requirements throughout. So even for one day. All right. So if your employee comes to you on the 15th of February and says, I'm fed up, I'm out of here, all right, you'll just hang on to that person, all right, till the end of February. You don't want to let them go because you want to keep your employees there throughout the year of assessment. I mean, I'm being a bit facetious here. But you get the point. I mean, they've got to be there throughout the year of assessment, all 365 days of the year.
My point here is that there throughout is inconsistent.
The way that SARS applies this. Okay. Yeah, I mean, we all know that SARS application of the law is not always consistent. All right. But this is basically what the law says, is that it's got to be throughout the year of assessment. Are you saying that sometimes you don't have them throughout the year of assessment, but SARS still allows that?
No.
Are you saying, no? Okay. All right. Now, I was just wondering there for a moment. Okay. All right. So excluded from the definition. So your 3 or more employees, as we've seen in a number of contexts already, that will help you. That will help you to get out of being a personal service provider. But without that, if you don't have your 3 or more employees and you get more than 80% of your income from one client, or you rendering the services and you're subject to control or supervision, etc., so you fall into the category of a PSP, you fall into the definition of an employee. Payments are subject to employees' tax, limited deductions, and again, SARS has quite a nice interpretation note on this, which you really need to have a look at. But let's just have a look at the limitation on the deductions here, Section 11K. Section 11 read together with 23K. So Section 11 talks about what you can deduct. All right. Now, Section 11, of course, has your general deduction formula, and then it's got all your various allowances, etc., etc. But then you also have to look at Section 23. And Section 23 has a whole lot of things that you can't deduct, like private expenditure. Remember, Section 23M talks about employees, things that you can't deduct as an employee. But because PSP is not an individual that we're talking about, it's a company or trust, we've got a special provision, Section 23K, which says a personal service provider cannot deduct anything except the following. So 23 is basically saying no deductions except what is allowed. So the only deductions that they can deduct is salaries and wages paid to employees, who include that in their taxable income, legal expenses, bad debts, contributions to funds for the benefit of employees, refunds of amounts previously paid as remuneration or compensation, And this is probably the one that most people really want to look at, especially if you have got a CC that is owner-managed and you don't really have a lot of employees. What are your expenses? Typically going to be rent, motor vehicle expenses, stationery, things like that. Well, the only thing you can deduct is expenses in respect of premises. There's your rental. Finance charges, if you've raised loans to buy your motor vehicle or, run your business, etc. Insurance, repairs, and fuel and maintenance of assets if the premises or assets are used wholly and exclusively for purposes of trade. That is, wholly and exclusively means 100%.